Hi, welcome to Konexio Technical Insights. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivatives data of Nifty, Bank Nifty and of the different asset classes. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets is slowly and gradually inching towards its lifetime high. Although Bank Nifty has tested its lifetime high, but looking at last week chart, we have mentioned that from here we might see some sort of cool off, and any dips should be used as a buying opportunity. So initially, what we have seen that initially the market traded with positive bias, and from Wednesday onward, from Tuesday to Wednesday onwards, it started correcting, and on Friday it ended on a negative note on the weekly charts, and on the fag end of the day, I mean to say in the last half an hour or 1 hour, we have seen Nifty and Bank Nifty slightly pulling back from the lower levels and ended slightly higher from its intraday low. So looking at to the weekly charts, the pattern is slightly negative, though market had rallied in a recent past. So there was some sort of pause or some sort of correction deemed to happen. We were expecting because global markets were also subdued. But in the last week, we have seen that global markets slightly pulled back. They had a rally, specifically US and European markets were gradually inching higher, and we had seen some sort of correction. Though the primary trend is very positive, and maybe in couple of months or maybe couple of weeks, we might see Nifty, Bank Nifty testing lifetime highs. But looking at the current pattern, some sort of weakness cannot be ruled out, or some sort of time correction cannot be ruled out, because next week is a monthly expiry. So most of the trading sessions would be towards rolling over of the positions from the current month series to the next month series. I mean to say from uh, May series to June series. So definitely we might see volatility coming into the markets, though from the lower levels, pullback on the upside cannot be ruled out, but that pullback might be for a short while, at least for next week. Markets might consolidate, and then we might see resumption of the uptrend. But as of now, purely looking at this particular closing, we feel that market might trade volatile for next week. So now, to have a clear view, let us check out the Nifty daily charts. So first of all, we will go to the Nifty daily charts and we'll try to figure out what pattern has been formed, and we'll try to analyze what could be the trend for the next week. So let us check out the Nifty daily charts. Now this is the Nifty daily charts. We have seen that Nifty has been moving into an upward rising channel, making higher tops, higher bottoms. Currently, if I stretch this chart, you can see clearly Nifty just took bottom or just took a pause, just slightly above the lower support line. So until and unless Nifty doesn't closes below this support trend line, so round figure I will take it the psychological mark, which is 18,000. So until and unless Nifty doesn't closes below 18,000 mark, we don't see a further sell off in the markets from these levels. Yes, market might behave in zigzag manner. Maybe it can form a running triangle or a triangular pattern, symmetrical triangle, that the time will come, time will show in next 2 to 3 trading sessions. So traders need to be slightly cautious while going long and going short. I'm not saying that that will not be a trade. In fact, I am saying that there will be trade on both the sides, in long and in short, a short side. But the trader should just do not. I would just suggest that traders should not try to play for huge moves. Just try to play for small moves, maybe half a percent move, maybe 70, 80 points in Nifty, and in Bank Nifty maybe 150 to 175 points. Just if you get those particular points, well and good. If you are long, just if you get 70, 80 points, book profits. If you are short, you get 70, 80 points, just book your profits. Because we see a consolidation for at least for the next week, and then we might see a clear uptrend. But as of now, looking at this particular daily charts, we might see some sort of pullback. But from higher levels, we might see some sort of profit booking also, purely because of the monthly expiry. So let us have a glimpse of weekly charts. So weekly charts, you can see it was a bearish candle. Both the side we have seen shadows. So we can say that it is an indecisive move on the weekly charts. Market traded in a range of its slightly just bigger than its previous week range. But as of now, that candle is bearish but indecisive. So I'm not saying that market will drop significantly from here and will rise significantly from here. But at least for next week, we might see some sort of consolidation. Maybe we might see a zigzag movement for next week. But one thing which I would like to just suggest is, or just to highlight, just for the sake of mentioning this, Nifty has formed what we call as a three black crows. I will show you this in this particular round. You can see this three red candles. It's purely a three black crows candle. So at least this is a bearish candle, bearish formation. So as of now, until and unless 18,000 is not breached and Nifty doesn't closes below those levels, I feel there are chances that this pattern might be negated. But if it closes below 18,000, then we might see further sell off, which might be lasting towards maybe 17,800 to 17,750. But as of now, it is unlikely, because I will wait for at least Nifty to close below 18,000 mark, and then we will have a view of the further downside targets. But as of now, at least I am expecting a pullback or a bounce back towards the level of 18,390 odd marks, at least in the next week. So now let us discuss the important supports and resistance level in Nifty for the next week. For the next week, the first support in the Nifty is placed at 18,060 mark, which is the swing low of this week. Below that, the second support is at 17,931, and below that, the third support is placed at 17,842. On the upside, the first resistance is placed around 18,297. Above that, the second resistance is placed around 18,342, and the third resistance is placed around 18,458, which was the swing high of the last week. And above those levels, above this swing high, Nifty might inch towards its lifetime high. But as of now, as I said, next week could be a week of consolidation, purely because of the monthly expiry. So we might see a zigzag move, at least for the next week, and that would be difficult for the traders, the long traders and the short traders as well. So friends, now let us check out the derivative data of Nifty. We will discuss Nifty call data. We will see on the screen. In Nifty calls, the action was seen in 18,300 calls, 18,400 calls, 18,500 calls, and 18,600 calls. Here you can see there was rise in the open interest. There was some shedding in open interest in 18,300 calls. Then you can see the implied volatility is low. It is between 8.20 to 8.68. You can see there has been a slight drop in option premium. So most probably we might see some sort of consolidation at these levels. And as I said, looking at purely at this particular data, you can see that there was shedding seen in 18,300 mark. So maybe I am sensing that maybe what we have seen in the last 1.5 hour in the Nifty, there was strong call writing seen in the last 3 days, but in the last 1.5 hours, there was some sort of short covering also being seen. So most probably, I think this shedding in 18,300 calls might be the profit booking of the call writers. So, and Nifty has closed just about 18,200 mark. So there are chances that Nifty might rally towards the levels of 18,400, at least for the next week. And from there, we might see again selling pressure coming in. So most probably data is okay. Nothing to worry about. as of now, until unless 18,000 is not breached. And on immediate basis, 18,300 could act as a major resistance. But the shedding is also seen. So if there is a further short covering in this particular call writing of 18,300 mark, then we might see Nifty inching towards the levels of 18,400. So now let us discuss what we have observed in Nifty put data. On the screen, you will see in Nifty put, the action was seen in 18,100 puts, 18,000 puts, 17,900 and 17,800 puts. Now here you can see the most important thing, that there has been a drop in the option premium. And as I said, that in last 1.5 hour, we have seen that Nifty had bounced back almost more than 100 points from its swing low, or maybe 140 points from its swing low. And this is clearly indicating that at lower levels, smart money had started writing puts. So at these levels, looking at this particular data, volume data, immediate support would be 18,100, but I don't think so. In next week, 18,000 could be breached. 90% I think that 18,000 would not be breached until unless we see some sort of sell off in global markets. Then only there are chances that 18,000 might get taken out. But looking at this particular data, 18,000 could act as a very strong support because it is a psychological mark. You can see the volumes are also on high. You can see the most important thing is the highest open interest concentration on 18,000 puts, and already you can see the smart money has started writing this 18,000 puts strongly. So I don't think so 18,000 could be breached. Any dips should be used as a buying opportunity, and Nifty might rally towards the level of 18,400 mark, and after that we might see again some sort of selling pressure coming in at those levels. So, friends, now let us check out Bank Nifty daily charts, and we will try to analyze what could be the trend for the next week in Bank Nifty. So, let me put down the Bank Nifty daily charts so that we will have a clear view. Bank Nifty has also seen a similar kind of move. It is moving into a rising wedge. It has taken a very strong support near its rising wedge support trend line. You can see it has taken 2 to 3 times, 1, 2, and 3 times support, and from those level it has bounced. But again, there is also resistance near 44,000 or 44,400, 500 mark. Looking at this particular pattern, we feel that Bank Nifty might also go into a time correction or a consolidation, at least for the next week. This is the daily charts. Let us check out the weekly chart also. In weekly chart, you can clearly see it is an indecisive candle, where the body of the candle is thin and there are shadows on both the sides, on the upside and the lower side. So it is clearly indicating that it is an indecisive uh, candle, indecisive trend. You can see 44,154 was previous lifetime high, and last week high was 44,151. Almost it is double top. You can clearly, it is clearly visible. You can see, if I mention the date, on 12th December 2022, you can see on the weekly candle, the high was marked as 44,151, and on last week 15th May candle 2023, the high was 44,151. So this is a double top, and double top could be ruthless at these levels. But as of now, I am not going heavily bearish, but yes, some sort of consolidation cannot be ruled out, some sort of volatility cannot be ruled out at these levels. But one thing I would like to mention, that once 44,151 is breached, we might see a sharp rally of 1,500 points from those levels, and Bank Nifty might inch towards the levels of maybe 45,500 to 46,000 in next 2 months. So one needs to be uh, slightly cautious at these levels, and those who are swing traders or positional traders, so just should just try to create strong long position once Nifty crosses 44,151 mark, for a rally of maybe 100 thousand to 1500 points rally from the breakout point. So as of now, looking at the monthly expiry next week, we feel some sort of time correction cannot be ruled out. So friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. Bank Nifty first support is placed at 43,668 is the first support. Second support is placed at 43,446. Third support is placed at 43,078. Whereas on the upside, the first resistance is placed at 44,151. Above that, the second resistance is placed at 44,352 and third resistance is at 44,844. These are the important supports and resistance level in Bank Nifty. By mistakenly, I've just mentioned it was just jumbled up, but what I mentioned, it was proper supports and resistance. So looking at this particular data of Bank Nifty daily and weekly charts and support and resistance, we feel that some sort of volatility cannot be ruled out purely just because of the monthly expiry next week. So friends, now let us check out the derivative data of Bank Nifty. We will just first analyze Bank Nifty call data. You will see on the screen. In Bank Nifty calls, the action was seen in 44,100 calls, then 44,500 calls and 45,000 calls. Now here you can see there has been a rise in the open interest, rise in the volumes. Implied volatility is between 10.47 to 10.81. You can see there has been a slightly positive change in option premium. That means some sort of buying could be observed from these levels. But for an rally, as I said, 44,151 is a lifetime high of Bank Nifty. It is also a double top. So until and unless those levels are not breached, one should avoid going long. So and looking at this particular data is also clearly mentioning that you can see the implied volatility on 44,100 is high, and then you can see the volume concentration is also high. After that, the second volume concentration is at 44,500 and open interest at 44,500. So it is clearly indicating that until and unless 44,151 is not breached, one should stay away from going long. And once it crosses, then definitely you can start buying Bank Nifty calls. Now let us discuss the Bank Nifty puts. In Bank Nifty puts, the action was seen in 43,700 puts, and 43,500 puts, and 43,000 puts. Now here you can see there has been a significant drop in option premium. This is the first sign that smart money has started writing out of the money puts strongly. Now, how it is how we can analyze this? You can look at the volumes, rise in the volumes, and rise in the open interest. So this is clearly indicating that at lower levels, the immediate support is at 43,700, and we feel that could act as a major support in the next week, and below that is 43,500. So at least for the next week, 43,500, at least I think that will not breach. And at lower levels, we might see some buying or bounce back coming in from the levels of 43,700 to 43,600. But I do not expect a very major correction at these levels. Now you can see there is lot of divergence in the data. There is a double top on the charts, but as well as there is a strong put writing in derivatives data. So as of now, I will go with the derivative data because this particular out of the money put writing is clearly indicating that there is a strong, very strong support at the lower levels. So as of now, looking at the charts of Nifty, Bank Nifty, the derivative data of Nifty and Bank Nifty, we clearly have a view that in Nifty, 18,000 would act as a very strong support, and in Bank Nifty, 43,500 would act as a very strong support on the downside. So next week is a monthly expiry. We might see zigzag pattern. There might be a formation of a running triangle formation or a symmetrical triangle formation. I'm just trying to preempt those formation of candle. I may be wrong, but I'm definitely confident that some kind of zigzag movement could be seen. So one needs to be slightly positive, slightly cautious, and one should trade with strict stop losses on both the side. I would again suggest that do not try to play for huge moves. Just try to play for 70, 80 points in Nifty and 150 to 175 points in Bank Nifty in long and short. And at the monthly expiry, then we will take a larger degree view for at least for next maybe 2 3 weeks. But as of now, next week could be highly volatile, so one needs to trade with strict stop losses. So friends, now let us come to the final segment of our show, which is positional call. Let's identify one stock from the IT sector. The name of the stock is Tech Mahindra. So let me check out this chart of Tech Mahindra. The stock has been consolidating for a quite long time. You will see on this chart, but this consolidation seems to be very strong. You can see the price volume action since May 2022 and till May 2023. Almost 1 year. Tech Mahindra took 1 year to consolidate, 1 year to make a strong base. Now, this kind of base is most probably, I would say that a launching pad for a stock to see a huge rally for long term. I'm not saying it for maybe for maybe couple of months. Yes, this particular call is for 3 4 months. For those who are thinking of accumulating or buying IT stock for next 4 to 5 years, this is the stock which should be there in your portfolio for at least 4 or 5 years. The stock has potential to reach its lifetime high, which is 1838 in next 3 4 years. But looking at this particular data, I would just want to initially I would just want to take a call for the upward resistance trend line of the consolidation mark. So first target would be for 1200. So looking at this consolidation pattern in a rectangular formation for one whole year, look, you can see the volumes are also rising. This means that strong money or smart money is accumulating this stock. RSI is also placed with positive bias. So definitely one should buy this stock or accumulate the stock at current levels and on corrections. So uh, for long-term investors, for positional traders, for swing traders, one should accumulate the stock in the range of 1072 and on corrections to 1050 for an upside target of 1200 in next 3 to 4 months. But as I said, the long 1 year of consolidation is an indication that this stock might see a huge rally in next 3 to 4 years. This stock might test the levels of 1800, 1850, maybe in next 3 to 4 years. But at least those who want to accumulate the stock can buy and keep it for next 3 to 4 years. But now this is for those who want to buy and keep it for next 3 to 4 years. But yes, definitely for swing traders, uh, one can accumulate in the range of 1072 and on corrections to 1050 for an upside target of 1200. Now this video is just for an education purpose. This is not a recommendation, so one should definitely consult your financial advisor before investing in the stock. So thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.